here? I guess it seems you are here. Okay. Regarding to your question, Mr. Eng, yes, whatever built-in function that we have in the Excel can be used. Yes, IRR, MIRR, MPV, all this stuff can be used.
Okay.
Yep. Yes. Standard deviation, everything, average, sum. There are many different functions in the Excel that, I mean, that's the whole purpose actually. There is a reason that I'm encouraging everyone to use Excel, that I want to make sure that you're familiarized, you get familiarized with the Excel, and you know how to use the Excel in order to do the capital budgeting and other stuff. Yep. That's a really powerful software actually. It's one of the most powerful software.
I do have Excel.
I guess you should have something else that in your...
The numbers, but the numbers, some of the thing that which is not as powerful as Excel, quite limited. Like the last assignment you asked me to calculate the using the don't know what model, then number cannot do it.
Goal seek, yeah, it's called goal seek, yeah.
Yes.
Sometimes goal seek is adds in. You can add it. You need to find out whether is there such option in your computer, Mac, that can you add in extra functions. Yeah. See, for example, some of these functions are not in the normal Excel. Sometimes we need to add in.
Yeah,
okay.
But in number, but I mean MacBook, I don't know lah. Like some of the symbol I search from the internet, I search everywhere. They all don't know how to insert the formula.
Is it? Okay.
We couldn't write certain thing. Like mean. There's one bar, there's one dash, one bar on top of the R. The kind of simple thing also, like many people don't know how to. I cannot find it because is the function is a bit different compared to Excel lah.
Yeah. Okay. Hopefully, you can find a way to do the assignment. Okay. Guys, shall we start? Today we're gonna do our best to cover 2 lectures. Hopefully we can finish it on time. Yeah. Okay. We're gonna go through chapter 1. The corporation and financial markets. Majority of it you're familiar, but what to do? We need to go through all these chapters. And if there is any question, anything, please ask me. Yeah. Not interrupt. I mean, just raise the hand or just on your mic and ask me the question. Okay, chapter outline, the 4 types of firms, ownership versus control of corporations, the stock market, and fintech, finance and technology. Guys, do you have any idea what are those 4 types of firms?
4 types of firm? Sole provider, Berhad, private limited lah, and then limited, meaning Berhad, and then corporate law.
Yeah, as you can see, different countries, they have different way of establishing the firms actually. But in general, actually, in some countries, they divide it in 3 different type of firms, or in some countries, they categorize it in 4 types of firms. But of course, majority of these, the categorization, they have the same attributes. But we're gonna see that what's the difference between these firms. Okay, objectives. List and define the 4 major types of firms in the United States. See, whatever we are referring to the United States, but it may not gonna be the same as Malaysia or my country or China or different countries. But in general, almost they have the same attributes. Describe major characteristics of each type, including the means for distributing incomes to owners. Distinguish between limited and unlimited liability, and list firm types that are subject to each type of liability. Describe the taxation consequences for C and S corporate forms. Discuss the division of corporate ownership into shares of stock, evaluate the implication of that division for corporate decision making, explain how corporate bankruptcy can be viewed as a change in firm ownership, compare and contrast the characteristic of shares that are publicly traded and those that are not. Describe the major changes that stock markets have gone through in the last decade. Differentiate between trading on an exchange and trading in a dark pool. Describe the impact of various types of fintech such as telecommunications, security, automation, and big data on the field of finance. Okay, as you mentioned, Mr. Ang, for example, based on the US market, US structure of the companies, this is the 4 different type of firms: sole proprietorship, partnership, limited liability company, LLC, and corporation, which under the corporation also we have C corporation and S corporation, which we're going to go through and going to see the characteristic of each type of a firm. Okay, this slide shows part A, see percentage of businesses. The major 72% of the corporation or the firms in the US are sole proprietorship. Corporation is just 18%, partnership is 3%, and limited liability company is 7%. But on the other hand, see in terms of the revenue, most of the revenue is coming from the corporation, which is 82%. And the second one is limited liability companies, partnership, and sole proprietorship. Let's see the characteristic of the sole proprietorship. Business is owned and run by just one person. It's a single man shop. Typically has few, if any, employees. Okay, advantages is easy to create. Even in Malaysia, I guess, establishing this type is quite easy and it's not really costly as well. Disadvantages: no separation between the firm and the owner. See, this is one of the biggest difference between the sole proprietorship and the corporation that we're gonna see later. Unlimited personal liability, that is important also. Unlimited personal liability means if in terms of bankruptcy, then your even personal asset would be in trouble. They can confiscate that. And it has a limited life. It means that if the owner passes away, then the life of this corporation also or firm will finish. Second type is partnership, similar to a sole proprietorship, but with more than one owner. All partners are personally liable for all the firm's debts. See, this is another legal consequences. A lender can require any partner to repay all of the firm's outstanding debts. The partnership ends with the death or withdrawal of any single partner. Limited partnership has two types of owners: general partners and limited partners. General partners have the same rights and liability as partners in a regular partnership, typically run the firm on a day-to-day basis. How about the limited partners? They have limited liability and cannot lose more than their initial investment. Have
The
no
law,
management. Yes.
the law changed already last year.
Yeah. This is based on the US. Okay. Yeah. Every country, of course, has a bit different changes here and there, but this is based on the US market, and it's just giving you some general idea, actually. Yeah.
Oh, right.
Yeah, have no management authority and cannot legally be involved in the managerial decision making for the business. Okay, another form is limited liability companies, which allow owners have limited liability, but they can also run the business. Yeah, as you can see, all is the legal terminology, and it all talks about the legal consequences that The owners gonna go through. Okay, LLC is a limited partnership without a general partner and relatively new business formed in the United States. Okay, the last type, the last form is corporation. It's a legal entity separate from its owners. Yeah, that is important. It's a legal entity. Has many of the legal powers individuals have, such as the ability to enter into contracts, own assets, and borrow money. The corporation is solely responsible for its own obligations. Its owners are not liable for any obligation the corporation enters into. See, here is the difference between the corporation and also the sole proprietorship and the partnership. It says that its owners are not liable for any obligation the corporation enters into. Why? Because it's a separate entity. It's a legal entity separate from its owners. Okay, formation. Corporation must be legally formed. The corporation files a charter with the state it wishes to incorporate in. The state then charters the corporation, formally giving its consent to the incorporation. Okay, due to its attractive legal environment for corporation, Delaware, I guess is the name of a place in US, is a popular choice for incorporation. If I'm not mistaken, each state has its own rules and regulation related to each corporation. And of course, investors or those people that intend to open any corporation gonna go somewhere that has a more lenient rules and regulation, which in US, many people prefer to go to Delaware. I don't know the pronunciation is correct or not, but it's Delaware. It's the name of a place. Okay, in terms of ownership, for the corporation, ownership is represented by shares of stock. Owners of a stock is called shareholder, stockholder, and equity holder. When you hear these three names are almost the same meaning. Sum of all ownership value is called equity, yeah? And there is no limit to the number of shareholders, and thus the amount of funds a company can raise by selling stock. Owner is entitled to dividend payments. They all should be familiar. You all need, I guess, should be familiar with this concept because you already have studied this part. What is dividend? What is share? Who is shareholder? All this stuff. Last time you have gone through. Okay, tax implications for corporate entities. Tax implication, they call it double taxation. Any idea what is double taxation? Hello guys, any idea what is double taxation?
Company, they tax company already, then they will still tax the personal income, is it?
Yes.
Business income and personal income.
That's correct, yes. Under the corporate, we're gonna have C corporation and S corporation. S corporation, firms' profit are not subject to corporate income tax, but instead are allocated directly to the shareholders, okay? There is an example, let's see. Taxation of corporate earnings, problem. You are a shareholder in a corporation. The corporation earns $8 per share before taxes. After it has paid taxes, it will distribute the rest of its earning to you as a dividend. The dividend is income to you, so you will then pay taxes on these earnings. The corporate tax rate is 25% and your tax rate on dividend income is 20%. How much of the earnings remain after all taxes are paid? Would you calculate it, guys? that how much of the earnings remain after all taxes are paid. I give you 1 minute to do it. Okay?
Mm.
This question, I give you 1 minute to do it.
Hey. Take them 0.25. Where's my card? Excellent question. Dividend on income tax.
Okay, Ren Yanju. Let's see. Let's wait and see other people's answer. We'll go through that. What you're supposed to calculate is how much of the earnings remains after all taxes paid. Okay. Two of you got answer, yeah? 4.8. Let's see. Okay, let's see the answer. See. As you see, this is called double taxation, yeah? Means that the company also needs to pay tax, and after that, when you receive that income, you also need to pay tax over the dividend that you already have received. Why? Because dividend considered income for you. Okay. First, the corporation pays taxes. It earned $8 per share, but must pay 25% tax. Means 0.25 multiplied by 8 is $2 tax to the government. Incorporate taxes. That leaves $6, yeah? $8 minus $2 tax, remaining is $6. That $6 then can be contributed or can be shared, can be given to the shareholders. However, you must pay 20% tax as well. Means 20% on that $6. Means $1.20 is the tax. Then $6 minus 1.20 is 4.80. Is few of you got the answer correct. Okay. As a shareholder, you only end up with $4.80 of the original of $8 in earnings. The remaining 2 plus 1.20, which is 3.20, is paid as taxes. Thus, your total effective tax rate is actually is 40%. Yep. This is called your effective. If someone asks you the total effective tax rate is 40%. Why? Because 3.20 out of $8 has been paid as the tax. Okay, this is under the corporation C corporation. There is another form of corporation. It's called S corporation. Later, we're gonna see that how is the tax calculation for the S corporation. Okay, you are a shareholder in a C corporation that has income before taxes of $4 million. Once the firm has paid taxes, it will distribute the rest of its earning to its shareholder as a dividend. There are 1 million shares outstanding. Assume the corporate tax rate is 34% and the personal tax rate on dividend income is 20%. As a shareholder, 100 shares, as a shareholder with 100 shares, how much will you receive after all taxes are paid? Okay, you have 2 minutes to do this question. Please do not refer to the answer to the slides. Yeah, try to do it by yourself. Okay, could you get the answer? Could you calculate? It's almost the same as the previous question. Okay, there is one answer as the name of 211.2. Guys, have you calculated it? You just simply refer to the answer in the slide. Hmm? Ranjin Lee, E Peng Peng. You calculated it or? Okay, let's see the answer. Okay, solution. First, the corporation must pay taxes. It earned $4 million, but must pay 34% tax, which equals to $1.36 million in corporate taxes. Then we deduct the 1.36 from the 4, which we leave with 2.64. That leaves $2.64 million to distribute to shareholders. Collectively, shareholders will have to pay 20% multiplied by 2.64 million, as which equals to $528,000 in taxes on the dividend. This leaves 2.64 million minus $528,000 equal to 2,112,000 after all taxes are paid. Okay, see the 4 million reduced up to almost $2 million. As the owner of 100 shares, you will have 211.20 cents after both corporate and personal taxes are paid. Do you know how to get it? 211? Yeah, that 2 million divided by the 1 million shares already had, then multiplied by number of shares that you own, which is 100, then that would be the amount that you're gonna earn. That is your income. Okay, is it clear up to here, guys? Any question, anything?
No.
Okay. Let's move to the next part. Okay, taxation of S corporation earnings. The previous one, if you remember, under the corporation, we have C and S. C corporation is double taxation. That company gonna pay whatever remains, then would be taxed at the personal level tax rate. Now we're gonna see the S corporation. Do you remember what's the difference between S corporation and C corporation? Difference is mentioned here. S corporations, firms' profit are not subject to corporate income tax, but instead are allocated directly to the shareholders. Okay, that's the difference between the S and C corporate tax payment. Okay, problem. It's saying that rework example 1.1, assuming the corporation in that example has elected subchapter S treatment and your tax rate on non-dividend income is 35%. Okay, this is a solution. In this case, the corporation pays no taxes. It earned $8 per share. Whether or not the corporation chooses to distribute or retain this cash, you must pay 35% multiply $8, which equals to $2.80 in income tax, which is $0.40 lower than the 3.20 paid in the example 1.1. As you can see, the difference here is that the tax that you are paying under this corporation is lower. But on the other hand, whether you receive or if you do not receive the dividend, you still need to pay tax to the government. Okay? These two are the biggest difference between the S and C corporation. Okay, question. You are a shareholder in an S corporation that has income before taxes of $4 million. Once the firm has paid the taxes, it will distribute the rest of its earning to its shareholders as a dividend. There are 1 million shares outstanding. Assume the corporate tax rate is 34% and the personal tax rate on dividend income is 20%. As a shareholder with 100 shares, how much will you receive after all taxes are paid? Okay, you have 2 minutes to do it, yeah? Guys, did you get the answer? Guys, answer. Hello. Okay. Some of you are saying is 320. Okay. Let's see. It seems you're so clever. Let's see later how it goes. Okay. Because the firm is a S corporation, the corporation pays no taxes, yeah? That leaves 4 million to distribute to shareholders collectively. Okay, shareholders. Collectively, shareholders will have to pay 20% over 4 million, which $800,000 in taxes, the dividend. This leaves 4 million minus 800,000 equal to $3,200,000 after all taxes are paid. As the owner of 100 shares, you will have $320 after personal taxes are paid. Okay, seems you're so clever. I'm happy. And hardworking. That's great. Okay, is there question up to here, guys? Anything you want to clear?
No.
Okay, that's great. We continue. Ownership versus control of corporations. Do you have any idea what's the difference between these two, ownership versus control of all corporations?
Control corporation is maybe the family manage the business.
Mm-hmm.
Corporation normally like public limited company. So
Yeah.
there's two types. Control company is those who are controlled by the family lah, normally.
Yeah.
Mm.
Family business. Yeah, that could be. That's correct. Okay. Let's see. Corporate management team. In a corporation, ownership and direct control are typically separate. See that? In a corporation, ownership and a direct control are typically separate. Okay, board of directors elected by shareholders have ultimate decision-making authority. Okay, who or how the board of directors are elected? Any idea?
No meeting.
Yeah, AGM, yeah, annual general meeting every year, maybe then they choose they elect the board of directors. And what is the role of board of directors?
Um, to provide consultation and advice to
Yeah,
and overseeing the
okay,
CEO.
yeah, you're right. And as you can see here, is have ultimate decision-making authority. Then they can elect the CEO as well. Okay. CEO stands for Chief Executive Officers. Board typically delegates day-to-day decision-making to CEO. Okay, this could be a typical organizational chart, which top of all these branches down is board of directors, and after that is CEO. Under the CEO, we have many different C's. CFO means Chief Financial Officer. Chief Operating Officer is COO. You can have CTO, CIO, CRO, many of all these different C's. But under the Chief Financial Officer, usually or mostly we have controller and treasurers, which controller is gonna do the accounting and the tax department. Why do we need to have controller, guys?
Compliance.
You're right. Compliance is one thing. Other than that, any other things?
Um,
Why do we need to
transparency.
have compliance?
Make sure you do the business correctly lah.
Okay, why do we need to make sure that we are doing the business correctly?
Because you need to answer to the shareholder.
That's correct. And there is a name to that. Then, if you are not doing the business correctly, what gonna happen? What will happen?
Mm, cannot think of it.
There is a name to that. Later, we're gonna see that. That is called agency problem, agency theory. Have you heard of that?
Mm.
Yeah. That's why we need to have a controller, accounting and tax department in order to oversee the compliance. That's correct. Another branch is treasurer that gonna do the capital budgeting, risk management, and the credit management. Okay, what is the capital budgeting, guys? What do we do under capital budgeting?
What do we do on the capital budgeting?
Yeah.
Um, to see whether company have enough money to invest in new project or expand the project, thing like that. Is it?
Okay, yeah. Any other idea?
Mm.
Capital budgeting. Okay, later we're gonna see that risk management as well as credit management. Okay, these are the role that falls under the treasurer. Okay, finance manager or financial manager is responsible for investment decisions, financing decisions, and cash management. Okay, referring back to the previous slide, capital budgeting falls under which of these decisions?
Capital budgeting fall under the financing decision.
Okay, if you're saying that capital budgeting falls under the investment decision, how about the credit management? Where does this one fall?
No, financing decisions.
Okay, you're saying that capital budgeting falls under the financing decision. My question is that now, credit management then falls under which one?
Credit management, also financing.
Okay. See, okay. Actually, capital budgeting falls under the investment decisions.
Oh,
Okay. Yeah. See, what do we do under the investment decision? we want to do some investment. Do you remember last time we covered the capital budgeting? If you remember, or investment decision. Do you remember I mentioned few names for the capital budgeting? CapEx,
Yeah.
investment decision, investment appraisal, or
Mm.
also we call it capital budgeting. What do we do under that? Do you remember we learned few techniques
Yeah.
of doing? Can you name some of the techniques under the investment
But
decision?
basically like fundamental analysis.
Okay, fundamental analysis is one way of doing that. That's correct. But few techniques that we learn under the investment
Uh,
decision, capital budgeting. Do you recall
uh,
the names?
um, PE ratio, all this, then W WACC interim index, correct?
Okay, we learn
But
about net present.
that is how we value the stock.
Okay, yeah, this is for the stock. What if you're not buying any stock or you want to buy some physical asset, for example? What techniques you gonna use?
Uh,
Do you remember net present value, NPV, IRR, payback period, discounted payback period, MIRR? All these techniques or PE ratio, as you mentioned, all falls under the capital budgeting and investment decision.
mm,
Yeah, see, we are making some decision, isn't it? What do we do under the net present value? We want to know that if we buy that particular asset, if we buy that particular machine or equipment, gonna give us some extra profit or no?
mm.
Yeah, that's the purpose of investment decision or capital budgeting. How about the financing decision? What decision do we make under that?
And do we borrow from bank or we increase equity, mm, raising equity?
That's correct. That, okay, we want to, for example, under investment decision, we came to the conclusion that we want to buy that particular equipment, that particular machine, that particular property. Okay, but where I gonna find money to buy that? If I have my own money from the company, that's fine. But what if I do not have enough money? What are you gonna do? I need to raise maybe, as you mentioned, debt, or I need to raise some equity. All this stuff that falls under the financing decision. In comparison between investment decision and financing decision, which one do you think is a more important decision to make?
Both are important.
Yeah, of course, both are important, but in comparison, relatively, which one is more important?
Investment.
Yeah, that's correct. That investment decision is more important than the financing decision. If you do some wrong investment, then you may not gonna get proper profits. If you do not have proper profits, if you do not have proper profit, then you cannot pay for your loan or for the dividend or for the coupons. Does it make sense to you guys?
Mm.
Yeah. And how about another financial manager's responsibility is cash management? What is that?
Cash management to make sure they have enough cash to pay the interest, yeah, for the operation, all this, no, and salary, all this.
Yeah, exactly. Yeah. For the day-to-day activities, you need to make sure that cash inflow and cash outflow is managed properly. Okay. One of the issues these days we can see because of the MCO that many companies are collapsing actually is because of the cash
Yeah,
management.
no
Because
inflow.
yeah, previously they were just doing their business was all fine, but they never managed the cash inflow and cash outflow. Right now that all the businesses are stopped and they do not have enough cash to pay for the expenses that they have. That's why you see that many of these SMEs are actually uh, going bankrupt. It means that the cash management is one of the most important activity of the company. You need to make sure that this part is working properly. It means your net working capital or the working capital actually. day to day, that you have enough reserve, that if you face any issues, at least you can cover up your issues and the expenses. It means that later, if any of you want to be hired by any company or corporation, these are some of the main responsibilities that you have. Okay, goal of the firm. What is the goal of the firm? What is the goal of the corporation?
Make money.
How to make money?
How to make money?
Yeah.
Yeah lah, make money.
Yeah, how to make money? Yeah, of course, make money, but there are different ways of making money. Okay, let's see. Here is written that shareholders will agree that they are better off if management makes decisions that maximize the value of their shares. See, we have two different things, maximizing the share value or the wealth and maximizing the profit. Which one should be chosen by the managers? Which one should be more highlighted and concentrated?
Maximize the what? The
Maximizing the profit, maximizing the share value.
profit lah, share values. You can have high value but no profits. What's the point?
Not really. See, then okay, how do we determine the value of the share?
Determine the value of the share.
Yes.
You mean in the stock market?
Yeah, in the stock, see, shareholders, we are talking about the shareholders right now, isn't it? Shareholders means the stockholders. Shareholders will agree that they are better off if management makes decision that maximize the value of their shares. Okay, but okay, we have maximizing the value of the shares in one hand, and on the other hand, we have maximizing the profit. You mentioned that we need to concentrate on maximizing the profit. I'm saying why.
To me, profit is the solid. I mean, yeah, your solid profit lah. Your return lah. Otherwise, you have values in the paper but no profit. So
how can you have value on the paper but no profit?
Just now you say if maximize the value of the share, man. So
okay, but how can you have that on the paper?
They can do a lot of investment, but the return is not coming immediately, or maybe it's risky. So there's potential, but it's not yet realizing yet.
Okay, if you refer to the efficient market hypothesis, Mr. Ang, if there is any good news or bad news, immediately would be affected or reflected in the share price or the value of the shares, isn't it? If there is a good project, then the value of the share gonna go up. If there is a bad project, the value of the share gonna drop. Okay, it means that whatever the corporation decide, that decision result immediately would be reflected on the value of the share. Okay. It means that that's a good indicator. The value of the share by itself in the market is a good indicator of the performance of the company, actually. If we are in the efficient market, then the value of the share is a good reflective of the performance of the company. On the other hand, if we have a manager, which a manager wants to keep his own position, wants to stay in the job, and he can do some action or he can make some decision in order to maximize the profit of the company for a short term, not for a long term. Okay, there are some managers, I mean, that based on the studies and based on the past, whatever happened, the history, we can see that there are some managers that they wanted just to take care of themselves. They made some decision that was not really increasing the value of the shares. For a short time, you could see that, okay, they would accept some project that maybe in a short term will create some profit, but in a long term would create some harm and loss to the company. Okay, do you get my point? What do I say?
Mm.
It means that at the end, the value of a share is a good representative of the value of the or performance of the company. It means that corporation need to, or the manager or the CEO supposed to what is it called, concentrate more on increasing the value of the shares rather than
Mm.
concentrating on the maximizing the profit. Okay, I get let me see, I guess I shared the screen. Yeah. Oh, what happened? What happened? Where did it go? Okay, what do you see? But what do you see right now?
On the all our names who are on
All the
the
names, yeah. I don't know what happened to the share things. I'm trying to share. Okay, right now you should be seeing the share, yeah? Okay, do you see right now the slides?
slide? No,
Okay,
yeah.
okay.
Mm.
Okay, the firm and society. Often a corporation's decision that increase the value of the firm's equity benefits society as a whole. See, what does here says that you maybe choose one project that can create a profit for the company in a short term or in a long term, but you may not be benefiting the society. Maybe there are a property company, a property corporation that gonna cut all the trees of part of a jungle in order to do some development. That development can create some profit or benefit to the corporation, but that development is really benefiting the whole society? No, because you're cutting the trees, you're destroying the nature. Okay, these are one of the things that we need to consider. That social, corporate social responsibility also comes in a picture in order to maximize the profit or maximize the value of the share. As long as nobody else is made worse off by a corporation's decisions, increasing the value of the firm's equity is good for society. It becomes a problem when increasing the value of the firm's equity comes at the expense of others. This is an important slide that we need to understand the difference between profit maximization and the maximizing the share value.
Mm.
Ethics and incentives within corporation. Agency problems. Agency problems. Managers may act in their own interest rather than in the best interest of the shareholders. This is called people and agents. Yeah. People, sometimes you're gonna hear the people refer to the shareholders, and agents refer to the managers. One potential solution is to tie management's compensation to firm performance. How should performance be measured? See, there is always conflict of interest. When we talk about agency theory and agency problems, there are agency problem number 1 and number 2. What does that mean? It means always there is a conflict of interest in a way between managers and the shareholders. Shareholders want to the value of the shares being increased, but on the other hand, not necessarily managers are working in that way on that favor. Maybe managers are thinking of themselves rather than concentrating on the value of the shares. That is called agency problem, and that creates some friction between shareholders and the managers. On the other hand, agency problem, there is another type of agency problem, that there is a conflict between the main shareholders, major shareholders, and the minor shareholders. Okay, in order to overcome the agency problem number one, actually, the friction between the managers and the shareholders, one of the solution is, one of the potential solution is to tie management's compensation to firm performance. CEO performance. If a CEO is performing poorly, shareholders can express their dissatisfaction by selling their shares. This selling pressure will drive the stock price down. If the share price goes down, then what is the consequences? Something happens as the name of hostile takeover. Low stock prices may entice a corporate trader to buy enough stock so that they enough control to replace current management and even the board of directors. The stock price will raise after the new management team fixes the company. As you can see, if the CEO is not doing really well, one of the consequences could be hostile takeover, which gonna has a huge impact on the corporation as well as all the stakeholders. Okay, corporate bankruptcy. Corporation failed to repay its debt. If it says that, what if the bankruptcy happen? What will happen to the corporation? Or when the corporate can go bankrupt? If they fail to pay their debt, okay? Then two major things can happen to the corporation. Either reorganization or liquidation. Can you explain what is the meaning of these two, guys?
Reorganization maybe through merging. Yeah. Then liquidation is to sell it off.
Yeah. Liquidation, of course, that if you're not able to pay or repay the debt, the debt holder or the creditor can sell off. Or on the other hand, if they see that one department, one unit of this corporation is doing well, maybe they, as you mentioned, that they can go for the mergers or just keep that part of the organization as that doing well and try to expand that part of the organization in order to make more profit that consequently that can pay the or repay the debt. Okay, do you recall that in terms of the bankruptcy, who gonna be paid first? Do you recall?
Who going to pay?
Who gonna get the money back first?
Shareholder.
No,
No. What? A
debt holders.
yeah, stakeholder.
No, debt holders, creditors.
Oh, yeah,
Yeah,
creditor. Then only the shareholder. Then only IPO.
I
IPO.
can hear you, Mr. James. What is that?
Uh, they need to pay the debt first. So creditor, then shareholder. Then only for those IPO lah.
What is IPO?
IPO. For those who buy the IPO law, initial preference offer.
No. And okay, half of the thing you mentioned is correct. I will complete it. See, in terms of bankruptcy, if in time of bankruptcy, any bankruptcy happens, creditors or debt holders in a way, they're gonna get paid first.
Yeah.
If anything remains, gonna go to the shareholders.
Yeah.
But of course, shareholders also they have different categories: preferred shareholders, ordinary shareholders, all this stuff.
Yeah.
Mr. James, it doesn't have anything with the IPO.
Yeah. Oh,
Okay,
okay.
it does not have anything with IPO. What
Prefer.
is IPO? The time that company wants to go public for a first time. Okay, when for the first time they issue shares to the public, that is called IPO, initial public offerings. After that, whoever buys the share considered shareholders. I mean, shares would be traded in the secondary market. Whoever owns the share.
Also for those who are by the IPO is not considered preference shareholder.
No, not necessarily. No.
Okay.
No. When you buy the share of a company over the IPO, now you are considered shareholder. Okay? But the type of a share you buy could be the ordinary share or could be the preferred share or different type of categories of a share. But in terms of bankruptcy, in time of a bankruptcy, who would be paid first? Debt holders. If anything remains, gonna go to the shareholders.
Okay.
Okay. The stock market. The stock market provides liquidity to shareholders. Liquidity, the ability to easily sell an asset for close to the price at which you can currently buy it. Yeah. Here is saying that what is the role of the stock market? Why do we need to have a stock market? And it creates or provides liquidity, means you easily can buy and sell the shares. Okay, public company and private company. Under the public company, a stock is traded by the public on a stock exchange. This is what we are talking right now. You would be a shareholder. Under the private company, stocks may be traded privately among the internal shareholders. It's not public. Okay, primary market and secondary market. When a corporation itself issues new shares of a stock and sells them to investors, they do so on the primary market. This part, Mr. Eng, is called IPO, primary market. Means for the first time a company is issuing a share. After people bought the shares, then it goes to the secondary markets. After the initial transaction in the primary market, the shares continue to trade in a secondary market between investors, which you are called shareholder. Is it clear here, this part?
Trade in secondary between investor, meaning if I already have I bought the share, then after that I want to trade, then I trade in the secondary market.
Yes. See, if you buy it first hand from the company for the first time that the share is issued, it's called IPO. It's just a name. Immediately after buying the share from the company, you're already a shareholder. If you do not want that share, if you want to sell off that share, the company not going to buy back the share from you. You need to sell it to other people, isn't it? When you're gonna or where you're gonna do that, you're gonna go through the stock exchange and you're gonna sell it to some other people. It means that you're already in the secondary market. Make sense?
Okay. Yep.
Okay, which part is not clear to you, Mr. Eng?
No. Yeah. It's okay. I think.
Okay. Okay. Okay, there are some names here. Traditional trading venues, New York Stock Exchange, NYSE, market makers, specialists. Each stock has only one market maker. Who is market maker?
Who is market maker?
Yeah.
Those companies, is it?
No.
Market maker. Okay.
We have market makers and we have market takers. Okay, if you want, see, it says that each stock has only one market maker. It means that, for example, if you want to buy a share of a Facebook, you need to go through a, for example, HSBC Bank in order to buy the Facebook share. Okay. That HSBC Bank is called market makers. What is the role of market makers? Is to provide a liquidity in the market. It means that they constantly need to quote buy price and sell price. That is the role of market makers. In a way, they are intermediaries. They are helping you to buy and sell the particular shares. On the other hand, also we have NASDAQ. Doesn't meet in a physical location, may have many market makers for a single stock. It means that, for example, if you want to buy the share of the McDonald's under the NASDAQ, for example, then you do not need necessarily go through the HSBC. You can go through, I don't know, maybe Citibank, maybe some other banks in order to buy the share of McDonald's if it is listed under the Nasdaq. Okay, bid price versus ask price. What is bid price is the buy price, and what is ask price is the sell price. Okay, which one is higher?
Which one is higher? Logically, sell price higher than buy price, but sometimes the other way around, then you make losses, no?
Okay, it depends. It depends see from whose perspective. But if the market maker provides, then if they want to buy it from you, then they're gonna buy it lower than the price that they're gonna sell it to be. I mean, ask price is higher than the bid price. But always is like that, Mr. Eng. Ask price from the market maker's perspective, ask price is always higher than the bid price. We're never gonna have the ask price lower than the bid price. No. Okay, these two price, if they go up, they're gonna go up by each other. If they drop, they're gonna drop by each other. Okay, we
Okay,
never
okay.
gonna have the ask price higher than the lower than the bid price.
Ah, okay.
Yeah. Okay, new competition and market changes. It says that in 2005, the New York Stock Exchange and Nasdaq exchanges accounted for over 75% of all trade in US stocks. Today, due to increased competition from new fully electronic exchanges and alternative trading systems, handle more than 50% of all trades. And why in most of the books they talk about the NYSE and Nasdaq? Because US market is the biggest financial market in the world by market capitalization. See this slide. And just one statistic, for example, just Microsoft shares by itself, the market capitalization of the just Microsoft shares is few times bigger than the whole stock market of Malaysia. Can you imagine that how big the US financial market is, or stock market is? What I just said that just one, which is, for example, is Microsoft, is few times bigger than the market capitalization of the whole Malaysia. That's why most of the books you hear the New York Stock Exchange, Nasdaq, all these big stock exchange. And what I said, you also can refer to this slide and the next slide in order to get some idea. Okay, new competition and market changes. Okay, new competition and market changes. Let me see, someone is messaging here, I guess, is it? Ren, okay, someone just joined, I guess. Okay, new competition and market changes. Limit order. An order to buy or sell a set amount at a fixed price is called limit order. What is limit order book? The collection of all limit orders. What does that mean? It means that you may holding few shares, not just one shares. You're owning few shares. And then the bid price, the ad price is called, or it will be recorded in the limit order book. It's a summary of the shares that you already own, the bid price, the ad price, the ask price, the trading volume, all these things. It is called limit order book. And we also have market orders. Orders that trade immediately at the best outstanding limit order. And also we have HFTs, which stands for high frequency traders. A class of traders who, with the aid of computers, execute trades many times per second in response to new information. Means automation actually comes in. It falls under the fintech algorithm gonna do all this trading for us. Okay, we have something else as the name of dark pools. Not dark web, dark pools. With exchange trading, have you heard of the dark pools at all, guys, before?
No.
Have you heard of it or no?
No.
No, yeah? Okay, with exchange trading, the limit book orders are public, allowing investors to trade at a current bid or ask price. And transactions are visible to all traders when they occur. If you have done any trading, you can see that buying, selling, bid price, ask price, trading volume, buy queue, sell queue, all these things is visible in a normal practice of trading the shares. But for the dark pools, do not make their limit order books visible. Okay, all this information in a way is hidden under the dark pools. Instead, they offer investors the ability to trade at a better price. For example, average of bid and ask, with the trade-off being that the order might not be filled if an excess of either buy or sell orders is received. Okay, what is dark pool? A dark pool is a privately organized financial forum or exchange for trading securities. Dark pools allow institutional investors to trade without exposure until after the trade has been executed and reported. Dark pools are a type of alternative trading system that gives certain investors the opportunity to place large orders and make trades without publicly revealing their intentions during the search for a buyer or seller. And points to this, dark pools are private asset exchanges designed to provide additional liquidity and anonymity for trading large blocks of securities away from the public eye. Dark pools provide pricing and cost advantages to buy-side institutions such as mutual funds and pension funds, which claim that these benefits ultimately accrue to the retail investors who invest in these funds. However, dark pools' lack of transparency makes them susceptible to conflicts of interest by their owners and predatory trading practices by high-frequency trading. There's pros and cons to this way of trading shares, which is called dark pool. Okay, fintech, the new trend, finance and technology. Fintech refers to the relation between financial innovation and technological or technical innovation. Okay, let's see. Telecommunications. Because the same financial securities are often traded on the markets, they are physically far apart. Finance professionals have always been amongst the first adopters of improved communication technologies. Security and verification, blockchain and cryptocurrencies, a technology that allows a transaction to be recorded in a publicly verified way without the need for a trusted third party to clarify the or to certify the authenticity of the transactions. Actually, blockchain has many usages in different industries as well. It's not just in the finance industry, but it is, in a way it started in the finance industry because of its advantages of the uh, decentralized ledgers and many other stuff that it has, that it eliminates the intermediaries. And this is one of the advantages that reduce the cost and increase the authenticity of the transactions. This is called blockchain. And blockchain these days can be used in medical, it can be used in the agriculture and many different industries. And cryptocurrency, a currency whose creation and ownership is determined via a public blockchain. Or digital currency also is. Do you know what is the difference between cryptocurrency and token? Have you heard of that?
Yep.
Difference between cryptocurrency and token?
No, what's different?
If you search, we have more than 1,000 of cryptocurrency and tokens. More than thousands. But the biggest difference between cryptocurrency and token is that token doesn't have its own blockchain yet. It's using other cryptocurrencies, blockchains. And this is the biggest difference between the cryptocurrency and token. Okay, automation of banking services, robo-advisors, computer programs that are intended to replace the work of financial advisors by providing detailed and customized investment recommendations. It falls under the automations. Big data and machine learning. Financial organizations have long recognized the importance of collecting data and using it in decision making. The availability of data has enabled companies throughout the economy to better target their products to consumers, and financial services companies are no exceptions. Then what is big data?
No, so they they collect the data from the website from us. Then they processing the data and yeah, it's all
Yeah,
the data.
yeah. Big data, of course, refers to the volume of the data that is tetrabytes, is not in gigabytes anymore, is in the tetrabytes, as well as the different form of data. For now, for example, the type of a data we know is a financial data, but the data can come in many different sources. Visual, text, clips, videos, all this stuff. They're all data, and they are raw data and unsupervised data. Then they need to be interpreted, isn't it? That machine learning can help us. Other than that, there are many different type of programming these days that people would become data scientists, which they can make sense out of all different type of data. Competition, technological advances have opened the way for non-finance organizations to provide financial services. Of course, these days, due to the technology, everyone is entering to the finance, even non-finance organizations. For example, see Grab. Grab is not a really finance company, but they are providing the Grab Pay. You can see that, yeah? Panda, they have Panda Food, they have their own, or Eva, for example, the Touch and Go, they have their own e-wallet. See, they are not really finance organizations, but due to the technology, they're also providing some financial services. Okay, here we got some questions. What are the advantages and disadvantages of organizing a business as a S corporation? And question 1 up to question. Okay, guys, do you have any question, anything, please ask.
No.
Okay, if there isn't any question, we can have a break and we can come back for the next chapter. Okay, now is 1:56. What time do you want to have your next session? How long do you want to have as a break?
15 minutes.
15 minutes. Okay, see you at 2:10. Is it okay?
All right.
Okay, see you at 2:10, guys. Thank you.